Hey guys, Andy Demi here. So yesterday I was coaching Middlesex University students who are currently doing the Applied Financial Trading program with us. And, we actually went down and I was actually coaching one of the students there, which you can kind of see in the video there. And basically, I then went on and broke down the euro dollar step by step using price action. And I wanted to share that with you because I think it's really, really important that you understand that the markets, don't rely on indicators to basically make your decisions. You'll be amazed how powerful, it is to learn how to use price action analysis to identify opportunities. And you'll kind of see that, how I did it in this video. We identified, by the way, a buy zone between 118.15 and 118.50. You'll kind of hear me say that. And then we kind of, we went from the higher time frames to the lower time frames, and we found, confluences, and we talked about how to actually take the trade, which is really, really important because it's not just, finding an opportunity. You've got to actually identify, well, what's going to be your trigger? How are you going to actually take the trade? So we think, okay, this is going to go up, but, are we just going to jump in? All those kind of things have to be planned. Where's your stop going to go? How are you going to get in? What's going to be your criteria? So let me be quiet now. I'm going to kind of unmute that and open up the screen and let you guys watch. But what we're trying to do is identify where this is most likely to go on the higher time frame, like the daily chart, and then we can take this down to the lower time frames once we know what's going on in the big picture.
Okay.
Does that make sense?
Yeah.
Brilliant. Well done.
Thank you.
No worries. Okay, so let me share screen. Okay, let's bring the euro dollar up then and see what it looks like. So let's remove drawings. Okay, so we did the daily chart, so I'm going to do the same thing and see what I can see here. Okay. So this is what we did, and it's easier on a laptop. You can just do that. So it's slightly, see there, it looks like it's on the line right now. So just go back and look at your levels. See, and just to let everybody know, and it's really important that we do this correct. It's fine to go through these little wicks, okay? Just don't go through the bodies. And you're just trying to find the line of best fit, then you clone it and you can move it down. So that looks quite good there as support. And then we will do, so here there's like potentially 3 points here as well. 1, 2, 3. This one is quite, let me see, that's better. That's a really, really, well, I'm actually not going to say what this is until I'm going to ask you guys what you see there. So it's fine that it's gone through. We had 1 and 2 touches there. Let me see what else we've got here. So again, all we're doing is we're just finding points of connection that the market likes to react, and we're just connecting them. And this is giving me a really, really nice picture of what's going on here. So again, I'm just going to ignore this one because we had 1, 2, and 3 touches. That's all the way down there. That's not relevant right now. So with these lines that we've just drawn in, who would like to say what they see? What do we see here? So obviously everybody can see that the market's been going down. But what do we think about this zone here? What is that? Beginning with S. Yeah, excellent. It's support. Well done, Levante. It's support. So we have not just one support though, right? We've got old resistance. So look at this. Why is this old resistance? Resistance, resistance, resistance. Even here, resistance, then broke it. That becomes, this area here becomes a potential support. Okay, a potential support. And then we've taken this line up here, projected it down, and then we can see we have support, support, and again, potential support. And this time we're actually on the line here. So what I would be doing here, guys, is to say, well, between 118.50 and 118.15, that kind of area, there might be some buying activity coming in here. That's what we should be thinking. Now, if you can do this, you are like further ahead than the majority of people that are analysing the markets. What most people are doing is they're just throwing indicators on and they're looking at RSI's overbought, RSI's oversold, stochastic overbought, but these indicators are never going to give you the kind of information that we've just identified just there. Doing just literally just support and resistance channel lines, essentially, nothing else. Everybody, does that make sense so far?
Yeah.
Yeah? And I would really encourage you to just learn how to do this rather than how to get rid of this.
So, would you enter around this time?
No. So what we would do is we would go and study the lower time frames. Now, the additional thing that I would do here is I would look to see where the Fibonacci targets are. So I would take a high point and low point, like here, and I would identify where the Fibonacci target is. Now, the way the Fibonacci works is if the market basically, so this is an A, okay, and this is a bit more complicated, all right, guys, but I'm just going to give you a basic, a B, and then the market creates, is the C is the deepest pullback between the AB before the D is reached. The D, by the way, is determined by the color. So if we pull back into the red zone, okay, the deepest pullback, where is the deepest pullback before the target is reached? So if the target is the red, which is here, you can see here the deepest pullback is in the red zone. It's this third red one here. That Fibonacci level, guys, is the most popular one. It's the 61.8% Fibonacci. So the market pulls back, so it goes down. This is noise, pulls back here, creates a C, and therefore the target is the 1618, which is here. And guess where we are? Where are we, guys? Are we at the 1618? So if we are at the 1618, and that is where this indicator, this Fibonacci sequence, is predicting that the market is going to stop going down here. Is that adding confluence to what we've already identified? Anybody?
Yeah.
Yeah? So if the sequence, so if the market basically moves in waves, right? And we predict, now remember, this is a prediction. This is not a fact at this point. We predict that the D wave ends here. So if the prediction of the D wave ends here, what's the price going to do here?
Jump up.
Absolutely. Yeah, it's probably going to go up. So here's the thing now. I will now go onto the 4-hour chart or the 1-hour chart, but am I going to be looking for selling opportunities? Who thinks I'm going to be looking for selling opportunities, and who thinks I'm going to be looking for buying opportunities? Just type it in the chat, please. Don't shout it out, just type it in the chat because I want to give everybody a chance. Do you think we should be looking for selling opportunities here or buying opportunities, guys? And everybody can please type it out. Okay, and if you're not sure, just type in not sure. I just want to make sure that you are following. Okay. So we've got so far 100% of you saying buying. Nobody wants to sell here. Awesome. Good job. That's exactly what we should be looking for. But you see, before doing this kind of work, if you looked at this blind and we put the euro dollar on and I zoomed in and you saw all these red bars, the natural thing is to say, well, it's going down, so let's sell it. But actually having done this work, can you now all see that actually the probability is not necessarily let's buy it right this second, right? But the probability is that we should be looking for buying opportunities, not selling opportunities, because that's what the odds are saying. The odds are we're going up. And that's what we're doing, guys. That is what we're doing. We are trading high probability. We want to trade where probability is on our side. We want to be the casino. We don't want to be the player, the gambler. So, and obviously, we don't know what's going to happen, right? I mean, anything can happen. And there's no analysis in the world, and there's no strategy in the world that will win 100% of the time. But here's the thing. If you do this type of work and you identify where the probabilities are by facts, you're going to make more money than you lose. It's really that simple. And that's what we're trying to do. Exactly that. The casino does lose. In fact, it loses a lot of the time. They only have a very small edge. Something like 4% is their edge. So, you know, it means that they do lose a lot of the time, but they know, they understand that the game is rigged in their favor. They understand that probability is in their favor. So they've got no problem with losing. You see that there's no negative psychology with losing because they know they're gonna, as long as people keep coming to their casino, they're gonna win. They know that. And that's what we need to create in your trading. So when you're trading, you need to know that you're going to be a winner, like whether the next trade wins or loses. Really important that you understand that concept. Does that make sense, everybody? Awesome. And the thing is, as well, is that sometimes when you ask beginners, you know, what's a good trade? The natural thing is, a good trade is one that wins. Actually, no. A good trade is one that has rules, that can be repeated, that has a positive edge, a positive outcome overall. That's what a good trade is. So you followed some rules, you've found probability to be on your side, and then you've taken the trade, and the outcome is just the outcome. Now, granted, if you lose money, there is some emotional psychology to that, which is why I said it's really important that we keep risk small. Because here's what can happen. you understand, for example, right now, okay, and we don't even, before we even go anywhere else, we understand that if generally you're a buyer in this kind of scenario, overall, if you keep doing this type of work, generally you're a buyer, you should win more than you lose, because probably we put probability on our side. But if you take this trade, guys, right now, and you have, I don't know, £500 in an account, and you decide you're going to risk £250 on this trade, half your account. Well, the chances is that, you know, you're not going to withstand the loss, because you're going to get affected psychologically. Or even worse, if you put all of your money onto the trade, if it starts to go wrong, you're going to have an emotional effect, or you won't be able to carry on anyway because you've blown all your money up. So, whereas if you take 1% or 2% on the trade, it loses. It's not the end of the world. You just find another trade, okay? And that's what you need to do to become a winning trader. Okay, there's no other way around it. So, having done this now, what we can do is we can go to let me go and see if I can bring in a 1 hour, 4 hour chart and remove all the drawings on here. Okay. So let's see what we have here. I mean, that is super aggressive at the moment. So let me ask you the question. What can we do? What kind of scenario could we look for to buy this? Anybody remember anything? What could we look for? What's a bullish sign? Because this comes down to now. I mean, I can even make this an hourly chart actually, because it might be easy to see the waves. But what can we do? What kind of way can we take this trade long? What will give us a sign to buy this? There's more than one thing, by the way. You can just list them. I'll start with one. So, one of them is a bullish candle formation. Does anyone remember any bullish candle formations? Does anyone remember any of the names? Levante, excellent. I'm gonna use that one in a second. Anyone remember any bullish candle formations? So we have the morning star. We have a bullish engulfing. We have a piercing line. Okay, any of these kind of candle formations are fine. A morning star is probably my favorite. Okay, so just look them up if you've forgotten them. So a candle formation, write that down, guys. So that's one way we can get into the trade. Another one, Levante says, is, well, why don't we look for higher lows? So in other words, higher highs and higher lows. So here, if the market's going down, right, it's generally making lower lows and lower highs. So very good, Levante, that's excellent. He's saying, well, actually, hold on, why don't we see if we're going to create a higher low here and then look to buy it? Okay, so that would be on the first swing, or you just say, well, we have a low point, a high point, a low point, a high point, a higher low, a higher high, and then you could buy it on the pullback. So the next higher low there to go higher. Right? Excellent. Two great things. So we've got candle formation, guys, and then a switch from lower lows and lower highs to higher lows and higher highs. Okay, you could do that. So make sure you write this stuff down, because this is going to be part of your strategy. You can choose. Anything else you can think of, guys? There's more. What else can we do? What else have you learned that could confirm that it's a good time to buy? What about any indicators? Any indicators you remember that you'd like to use? Okay, moving averages. What specifically would you look for on a moving average? What would confirm for you to be a buy signal? Have a little think about that. Any other indicators, guys? Any specific moving averages? And this goes to all of you guys. Any specific moving averages? I'll put the 21 moving average. So the 21 is quite a fast one, and then you can have the 50 as well. So exponential. I will change this one to a 50. Okay, these two are good. And it's red. And you can have the 200 on there as well. But what's the signal? So you've got to have a signal. This is the 8. I'm just going to make this 200 again. And green. And there's a 200. See, I see a lot of great things here by these moving averages that I've just put on there. Who can tell me what they see? It's important that we learn what's going on here, so we need to be able to study them. So who can explain? You can unmute yourselves if you think you understand something important here. What can we see here with the moving averages? What's going to help us? If you're not sure, that's fine. I'll explain it. Anybody want to unmute themselves? No, that's fine. So I'll tell you what I can see. I can see this. I can see that when the market's moving down, it likes to react on this blue line, which is the 21 EMA. And then I see when it breaks that 21 EMA, in this occasion, it ran all the way to the green line, which is the 200. I also noticed that this market likes to react on the green line, the 200. Okay, these are observations. We need to make note of these. Again, the market pushes down. Look how well it's holding on the 21 again, on the blue line. So now tell me, guys, what are we going to do? What's going to be our buy signal? What can be a conservative buy signal? Who's going to get it? Alberto will give you a prize, I'm sure, when he sees you at university. He'll bring you some chocolates if you can get it right. He likes to donate chocolates. Alberto, are you listening, yeah? If they get it right, you're taking them chocolates. Good effort, Levente. That's not the answer I'm looking for. Not quite, Victoria. So, remember this, guys. Okay, so it's great that you're trying, because this is going to help you a lot. When we looked at the daily chart, have we identified that the price could be imminently going up? Just let me know if that's a yes. Have we identified that the price could be imminently going up? So quite soon, right? Now, good. Levente's saying yes. I'm going to assume you're all saying yes. Okay, say yes in your head. Let's say that's the case. Now, Levente, you suggested actually we could buy when we cross the green line. Now, yes, you could, but you're kind of missing out on a lot of profits, right? Because we've already done all of this work. So let me just show you. 120.20 is where the green line is right now. Okay, so let me show you the daily chart so you can understand what I'm saying to you. 120.10.20, to put it into perspective, is there. So we've done all this great work, right? And then we're then saying we're going to buy here, right? Or just above here. What about this? That's money to be made there. Does that make sense? So let me go back over here. Now tell me the answer. What signal? What happened the last time over here? Look at this as an example. What happened? What did we cross and where did we go? You're getting closer. It's definitely something to do with the blue one. Anybody else want to help him? It's not when it curves up, but what happens, it's when what happens to price. Right, let me give you a clue. Yeah, excellent, well done. When the price crosses above the blue line, in fact, to be even more specific than that, when the price closes above the blue line. Look, that's the bar there. Last time the bar closed above the blue line, we went up to the green line. So if we want confirmation, wait for the bar to close above the blue line, and then you can take it up to here, which is great because that roughly that price is also right to the top of this channel. Can you see how they're matching up now? So this is the basis of building the building blocks of building high probability trading. So, you know, some people would say, well, you know, you can kind of jump in early, and you can. A candle formation is early. You could get in even earlier, just try and catch the bottom. But
when you get a close, like when you get that confirmation, the probability increases. The reward to risk goes down, but the probability increases. So it depends on what type of trader you're going to be. Look, I'm not going to deny, I would probably be the trader that's looking to catch it on the way down, and then I'd be adding up here. So, but that's me, and I'm a very experienced trader. Like for most beginners, wait for the confirmation, let the market go, show you proof that it's ready to go up again, and then take the trade. And you can use other things as well, like the RSI.
All right, guys, I'm just going to stop that now. So I hope you got value from that. I wanted to share it to you because I thought, whatever level you were at, I thought it would give you a really good insight into, the process of identifying high probability situations. And you've got to look at the market from multiple angles, and you've got to value price over everything else. Okay, and then we can use all the other technical bits, our Fibonacci. We can use other indicators to add that confirmation. But first and foremost, we've got to be able to manipulate the market and identify the high probability zones. And if you kind of want to see what's happened to the euro dollar since we did that yesterday, I'll show you exactly what's happened to it. It's flying, guys. It's absolutely flying. You can kind of see literally it's we said buy between 118.15 and 118.50. The low was literally in the middle of those, around 118.36, and we've had a really nice move up. You can see we've closed above that 21 that blue line that we were speaking about. So for those that waited for confirmation, they would still be in profit. So there was basically if you took the early trade, you're up about 70 pips. If you took the confirmation, then you're still up a good sort of 30-40 pips there. So I wanted to kind of share that with you guys, not just because it's doing what we said it was going to do, because it's no guarantees. Like as I was saying in the presentation, it's about probabilities. But I thought this was a really good session. We got some really good feedback from the students of Middlesex, and we felt like actually we should share this with our group. So hope it helps. Have a great day. Good trading. And by the way, if you are new to trading, if you haven't done any of our training, we do have, we've got mentoring programs, but we also do have a free introduction to trading course that will get you started, that will kind of break down all the process of becoming a trader. So we'll post a link underneath this video in the description, and you can basically just click it, sign up if you haven't already done so, and and make sure I don't know where you're watching this, but make sure you're in our group. It was the FX Traders Club. It's now called the Crypto and FX Traders Club, because crypto at the moment is hot and we're doing really, really well from cryptos. So if you want to kind of see what I'm doing in the crypto space and the FX space, and kind of get to see live insights, do join our group if you're not watching in our group already. Have a good one, guys. Take care. See you soon.